Good afternoon, Scott Redler, T3Live. Welcome to today's recap. So today felt probably like the slowest day of the year. And it was one of those days where there was like a lot of action in the first 15, 20 minutes. I know I hit the high of my P&L probably by 9:40, and it was a slow drip and drab all the way down thereafter. And there was a lot of frustration on the desk and a lot of frustration in the chat, and you could treat it two different ways. If you look at the title of the morning write-up, it was digestion. All right, what happens with digestion? Does digestion say, does that mean to yourself, go get them and gap and go and craziness to the upside? Or digestion usually is what happens after a nice meal. You sit back, you relax, you maybe watch some TV, you take a look at the lay of the land. Same thing with the charts and the stocks. We just had a 3-day bounce back in the markets from very oversold territory. We're at an area where the market really needs to prove if this was a retest of the broken accelerated trend line, or that we could hold higher for what could be higher prices. So there were some guys, like two guys broke a computer screen today, which I don't understand, but anyway, it is what it is. But the bottom line is, in the scheme of it, if you look at the chart here, it makes sense. You go to the chart of the spiders and you'll see, we talk about this gradual trend that didn't even get close to being tested, and then this accelerated trend, and here we are. This is what's a little bit more complicated. This was when we closed below the 10-day moving average. Here is your move lower. Down here versus the 1340, which was a level we spoke about many times. We were about negative 80 on the McClellan oscillator. From there, you had 3 days to the upside, back to prior resistance. And now if you take a look here, and I'll show you, we talked about digestion, and another thing we said is, as long as we stay above this spot, okay, I wasn't even saying above the 10-day, I was saying, above this spot, that would be a win or constructive for short-term momentum bulls. Okay, we just stayed even higher, so now at least we know where the recent 2-day support is, which is right around here, and you have a small descending little area to trade against. So for short-term traders, a day like today is really good, okay, especially with the Fed coming in tomorrow, or the Fed coming out with their announcement tomorrow, which we could be on hold for. So why would we break out to the races on a day after a 3-day move off of oversold territory into big-time resistance? So, with that said, the Dow was up like 40 points, and technology lagged. Some of the stocks that we watch were really just out of play, but some of the material stocks are up. Some of the I don't even know the group. Some of the utilities, and I hate to sound ignorant, but I don't really trade them. They don't move that fast. But some of the utilities had a good day, and I'll maybe go over them in a little bit. And then, so it was just a day where if it wasn't what was on your list, you either could have overtraded and lost more than you needed to lose, or maybe you made some, gave some back, and you stepped back and said, you know what, I'm going to wait for more setups. As far as a setup that happened today, Apple was in the beginning of the day. You could look at it two ways. There were like 4 or 5 different trades in there. Apple went above this trigger. Okay, we talked about this morning call. Unfortunately, a lot of guys were complaining because it started to go before the open, and rightly so. If it goes before the open, it's a little bit more risky just to grab it. So that's fine, and I understand. So I came in pretty much flatted. I started buying it below 540, 850-ish, because I figured if it got above this high here, if you look at the high here, that was 548.21, that was a pivot. And then you were able to add for a quick scalp through 550. It went as high as like 551.50. I sold some into the strength, and then I trailed some, and then when it went back above the previous high, I said, I'm done with it for now. Some guys made a little cute short trade, and some guys bought the dip, and we closed on the highs, and now we'll see if we extend tomorrow. But all in all, it's a tougher trade now because this was the exciting little resistance pivot, which it's now above, and now we just have to judge it. If we open down tomorrow, chances are they try and take Apple positive, and then if it goes through today's high of 552, it can extend. But overall, it's trending, and it still looks really, really good, and it's a buy on dips. Fortunately, myself, I got a little caught up in this IBM today. I haven't traded in a while, but it looks strong this morning, and for some reason, I just felt like it was going to extend a little bit today. And in the morning, it hit a high early on, and then I bought, at the prior highs, and it just there's no momentum here. Like, you could buy and hold this thing, but to try and trade this for momentum, it's definitely tough. And if you look here, just methodically, this is when we were in a tier 1. This was your add, and we had a nice cash flow trade, went back to tier 1 after adding into the spot. Then here was that methodical move. If you remember, this was that nice little cash flow trade again as it traded above this pivot high here. And then I actually out of luck, I guess, I went flat IBM just because that was right before the pull-in. Then it came in, never traded below this pivot, and it's been slowly trending up. So if you're still long IBM, it's really giving you no reason to get out of it, hasn't violated any of the real rules. The only thing it is it's not really good for a momentum trader. You only get trades every now and then, and maybe we'll get a little bit closer. Tomorrow I'm still long some, and we'll figure it out. As far as continuity, the Chinese internet stocks started off strong, and on the news that Youku and had a merger 1-for-1, and it was up a decent percentage. So Sino was up, Baidu was up, all of them were up. And unfortunately, if you chase that up opening, you lost money because it faded. Evan was actually, Evan likes to short things, and he was all over that, and he saw the weakness off the bat and made money. But if you think about it as an active trader, there are a few like active trading rules, 101. If things gap up, okay, you don't look and chase it, you actually try and short it. Okay, if they pull in and fade and fill the gap, you made your cash flow trade. If they pull in and they hold higher, okay, and you see a divergence where the futures continue lower, and then it still holds that gap, you say, okay, it's not fading, it's not going to fill the gap, you cover your short, and then once it goes above that 30-minute high or 15-minute high, you buy it for continuation. You just don't go and buy the opening move and get all excited, because that's how you get spun around. The same way, typically, when you gap down as an active trader, you just don't short that gap down. You typically look to buy the gap down versus the low, and then you see whether or not it fills the gap and then continues, or you get a nice reversal. So in active trading 101 land, you always fade the first move, and then you figure out whether or not that that move is buyable or there's continuation there. So with that said, let's talk about quickly some coffee stocks. Starbucks, really nice move. It's going to take some time. This is when we talked about in options profits. It's okay. Dunkin' Donuts, I still like it a lot. It gapped up into the old IPO high. Wasn't strong enough to take it out, but I think that you could trade this one. I bought it into this day and still holding it. Just shows you how you could use a tier system and hold from 30 to almost 31. Big deal. Anyway, it's still on its way. I think that you could hold this one and trade this one. If you can't do both, just hold it and don't look at it. It makes, in my opinion, I think it goes higher. It's got to obviously get above that, 31.92 and close above it. For the bears to not say, oh, double top, but I just think that this company has a lot more upside this year. As far as Java, Mike Lee was all over this one. JVA, nice big move to the upside. Shows you how you could time some things. Look at this move that happened. What was this, Friday? On volume through resistance. If you took it home long because it was the first day up on volume, if I plug in the volume right here, you'll see. You go to Basic Studies, you put volume in. You press OK. Look at the size of the volume that came in on Friday. Someone came in and covered some shorts and bought it and said there's something exciting here, and then pow, day 2. Now I think it's a little risky to be in there for day 3 or day 4, but you can find trades even if they're not leaders, even if they're not at highs. But there's a difference between an investment and a trade, and this woke up on Friday and you had nice continuation on Monday, and that's just something good to notice as a trader. You want stocks to follow the rules. Okay, that's all you could do. As a trader, you have a set of rules, and if a stock goes up and ignites, because that's an igniting bar, on volume, you get a day 1. Typically, if it's not too huge of a day, you get day 2, you get 3, and that's called follow through. And that's what we like as traders. You always hear traders complain, or I complain if you don't get that continuation or follow through, because sometimes it's hard to catch the first move because it's not on your radar and you don't want to get in there late. But you wait for that first move to consolidate to get the second and third. And when there's no follow through in the market, you don't get the second and third, and that's frustrating. Something like JVA, at least it was another day. You had your follow through. So as far as guys like Google, for instance, Google broke down, right, or it was weak on Friday. So people were hoping, just as traders, broke down in the middle end of the range, traded short through Friday's low for follow through. You look at Google today, there was no follow through. So if you go here and take a bigger look at Google, it's just still in this overall chop fest. But when you have a down move like this and it engulfs a few days, didn't engulf this day, some traders are probably shorting this low here, rightly so, whether you're a long-term bull on Google or not, you could make cash flow, and you would think that after closing, or just say if this is the channel and hovering in the bottom end of the channel, you would think that as a trade, you could see more weakness and there was no follow through. It's just another day in the life of Google, and that's why I'm not really focusing on it, because it's hard. Same thing with Amazon. No follow through right now. There just isn't. Okay? You look at this lower wedge here, you take a closer look and you'll see, let me get this out of the way, it never broke below this rising support, right? So there was no follow through to the downside, even though on a macro level, it's way below the highs. And it's, you have a high, lower high, lower high, lower high, lower high, and there you are there in this lower pivot. And then if you look at the flip side last week, remember it woke up a little bit, right? A lot of bulls got excited, Sperling got excited, he's been trying to play this to the upside, broke above this little range, right? And closed strong. You would have thought you would have some follow through to the resistance. Was there follow through? No. It opened down, never let you out of the trade, and now you're back down here. So that's what's frustrating when there's no follow through, okay? Because follow through is the holy grail or the secret sauce, and it's not actually none of that. It's just a good thing to happen, in a good trading market. And at certain points of the market, there's just no follow through and there's no momentum. And at that particular point, or in this particular point, or in that particular stock, you just have to do less and wait for it to change. That's why I went to buying puts in Amazon, because I'm like, every time I add to it, I get hurt because there's no follow through. It's not trading well. It's hard. When there's no follow through and it's not trading well and it's hard, no need for you to be there. No need to be sitting at a blackjack table where you keep getting a 5 versus 5 and you're trying to make a hand happen, because those are hard. 5 versus 5 in blackjack land is tough. I'd rather take a 10 versus 5 and pick that hand, because we could do that in the stock market, or have an 11 versus 6, or even a 9 versus 6, like one of those hands. Why play the 5 versus 5 or a 6 versus a jack? Because those are the hands that just, there's too much luck there and it's too choppy. So, in just say the social media land, LinkedIn off the bat was a good trade, right? We had a long, you saw in the virtual trade floor on Friday. I added through 91.50, because that's what I do. I added for some follow through. It gave you a little follow through. Went as high as 93, so you sell some into that, okay? So what I did is just say I was in a tier 1 overnight, because overnight I like to only go tier 1 because I like to have control. Through 91.50 I went to tier 2. As it extended above there, I sold some about around 92.50, and I went back to tier 1. I said, I want to see if there's more follow through. I want to see if LinkedIn could hold above that 91.5 or even above 92 and hold tight, flag, because then if it went through 93, I would have added again. But there was no follow through. So I made money on one trade, and now I'm still with what I had overnight, because it's still not ready to just get going, and it closed fine. So if you looked here at LinkedIn, you will see, it traded through this little pivot, which is why I had, this is a buy area, because you have a 2-day pivot, and it pushed. It couldn't get above major resistance or even tested, and then closed a little bit off. So at this point, you have to be a little bit more careful. Maybe it needs a little bit more time for it to get some follow through. But if you look at the 3-minute chart, you had to really be prepared, because it happens so damn quick. So if you look here, okay, let me just take a little sip of my Starbucks. Hold on. There you go. I have a little scratch in my voice. This was the move off the boat, or off the boat. A lot of people coming off the boat these days. Anyway, off the bat, and it was your first quick move. And then if you were prepared with 91.50, you had a nice trade through 91.50, and it went as high as 93. And you had some time to sell some there. So right there, you want to figure out, would it hold this last breakout, or would it not? And typically, as soon as you saw it pull all the way into here, it was a little troublesome. But then it popped right back to the highs. I was talking about it on the radio. I'm like, ooh, I'm almost ready to buy 93s. And I held back because I knew it needed more time. And then once it broke below the halfway point, it put me back on alert. And then, and then I sold a little bit more. And then I just held for the rest of the day, because it's still fine. It didn't have follow through that I would like. But, you had a cash flow trade. And now with a little bit more sideways action, maybe it happens. The Zynga also, this one I have a feeling I might get in a little trouble with, but a lot of my sales traders that I talk to that are in love with this company say it's going to be a $20 number. So think of, here you go. Take that with a grain of salt. Come back to me. You know, whenever something turns into a concept play, people are like, oh, the chart doesn't look good. I'm like, it's a concept play. What that means is I probably lose money and I probably break some rules because technically it's not acting well. And I'm listening to someone on the fundamental side who's telling me a story about why it should happen. And the technicals are telling me that it's not ready for that to happen yet. So I'm going to try and stay with it and do my best. But if you look here at the chart, it's still fine, to be honest. You know, here's your little uptrend. It's above the moving averages. I would have liked for it to, to break above this area, so maybe it's just not ready yet. You could go here a little bit more shorter term. It's still above this mini trend here. To me, I think, where will I have my wherewithal? Okay, this is 13.19. I probably won't be there that long for that one. I'd say I'll be in this thing until at least 13.40. And if it starts to break above this 1450, that's when I'll add, and that's when it'll continue. But I'm not going to just turn this into a concept play that I just buy and buy and buy, because typically I lose on those. But it's Zynga, it's a new issue. There's a lot of people behind this thing both ways, so I'll give it a little bit more time. I don't love the way it closed, but I'll stick with it for a little while. I'm not that big. I'm only in a tier 1, and I'll only be in a tier 1, 1.5 for a concept play. But then if it turns into a good trade, where if it wasn't a concept play and I would just be there, then I might get to tier 3 and tier 4, so I might as well get to know it. And so far, it's been a decent trading vehicle for us. As far as like JP Morgan, I know some guys bought the dip today. I talked about if 40.20, which was right around the 10-day. It came off there. Still looks pretty good. The banks have their stress test later this week coming out, the results. This still looks like best in breed. Bank of America still needs some time. It's still hovering, and it's still fine if you look at it in this channel. And at some particular point, it did come off the lows. If it starts to trade above here, maybe after the results, it could get going again, which would be good for the market. Goldman Sachs, some guys were talking about. If you look here, it's got a 3-day range right now. So I know it's a laggard. It's very frustrating to me. I rarely make money in this lately, this stock. So again, it's like the 5 versus 5 for me. Or maybe this is like a 7 versus 6. So it's not easy, but we make some money here. Here's your 3-day inside range. If it starts to break above this, perhaps you get a nice little trade for it to continue. Maybe that was enough time that it needed. And then at least you have a 3-day range here to trade against. So that's your 3-day range on Goldman Sachs, and you could figure it out from there. So with all that said, just think about how you approach the day. If you thought that today would be a digestion day, did you overtrade? And if you did, just figure out next time not to do it. Did you lose a little excess money? Did you put your high of the day in at 9:45 and turn it into just trading off the high, or did you turn it into a day where you lost your limit and nothing really happened? So you have to look at these days, and you have to just look at them closely and identify what you did well and what you did poorly. So next time it happens, you don't have this slippage that you might have had today, and that's how you save money, and that's how you move forward, and that's how you limit your frustration. So today we digested. Tomorrow we have Fed Day. There's still a lot of news coming out every day about Europe. Today they were really talking about Portugal and Spain. Will they follow in Greece's footsteps? They don't know yet, but I think it was a little bit more encouraging on that news end, but we'll see. And at this point, no big bets. You can make trades both ways. You saw that in LVS, right? Last week, great buy on Tuesday. Let me just get into that one before we close up. Here was that reversal on that Friday. Got the cash. This was a nice little buy the dip into support. 3-day move, how you traded it depended. I only traded it for this day. And then there was a nice short here on Friday. You had a little bit of follow through to the downside. And now it probably needs more time, but this just shows you that you can make money day trading as well. You don't have to be in multiple positions if you're not comfortable with that. Just pick your time frame, be honest with yourself, and stick to it. But just also try and grow, because there's a lot more money out there besides just trading the momentum, and things have been trending in different areas. Scott Redler, T3Live, the recap. See you tomorrow morning on the call with Brittany. Have a good night.